a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Trading trade. Futures muted after a searing rally in Monday's session as President Trump pledges a stronger relationship with Japan. All of this, of course, before his meeting with his Chinese counterpart Thursday. Mounting layoffs. Amazon and Paramount announcing job cuts in the last 24 hours as corporate America tightens its belt and turns to AI. And bank CEOs downplaying credit market concerns at the Future Investment Initiative. We're live in Riyadh this hour. So let's take a look at the futures picture then, because we're not seeing much movement at the moment. We did get that massive rally yesterday. It stalled out a little bit in the Asia session overnight, although just in the last few minutes we're getting several headlines out of Xinhua News to the effect that China is going to boost consumption, is going to concentrate on quantum tech, on 6G. A lot of future-facing headlines coming out just in the last few minutes. Funny timing that with the Trump meeting coming on Thursday and such warm relations with Japan. So warm, in fact, that the yen is trading below 152 today. Let's take a look at the bond picture because we started with those auctions this week. They have been going pretty well. We have the 2-year at 3.48, the 10-year yield well back below 4%. Now 4 seems to be a ceiling as opposed to a floor, and the 30-year yield well below 4.60. So a little bit of curve flattening as we enter day 28 of the shutdown. I should also mention that copper continues to be at records and gold is back below $4,000. Make of all of that what you will, but let's get to some individual market movers now. Over to London, Valerie Teitel. Valerie.
Good morning, Bonnie. I have a few to mention in the chip sector. Let's start with Micron Technology on a back foot, down 1.25% after its rival Samsung moves to slash some prices in the high bandwidth memory chip sector that Micron competes with them very heavily in. Samsung announcing they want to slash prices by around 30% in order to gain market share. So perhaps we're now looking at a very competitive landscape in the HBM chip department. So Micron on a back foot, as well as its competitor SK Hynix over in South Korea was down some 7% on the back of this announcement from Samsung. Sticking with chips, let's talk about NXP Semiconductors. They're out with earnings yesterday, giving a bullish guidance here. Now, this is key because they operate in the autos and industrial space here, Bonnie, and there had been some delays from their customer orders off the back of all the uncertainty around Trump's tariffs. They don't see that any longer and given a rosy outlook for Wall Street. So NXP Semiconductors up 1.6% in pre-market. Lastly, let's talk about the power trade. Google is teaming up with NextEra Energy. This is a nuclear power company in order to collaborate on future nuclear power production. NextEra Energy up 3.4%. They've also said that on the back of this collaboration, they are restarting a nuclear power plant in Iowa in order to team up with Google's power needs. Bonnie?
Valerie, thank you so much. And later this hour, we're going to be speaking with Kim Crawford of JPMorgan Asset Management as we enter day 28 of the U.S. government shutdown. But first, President Trump and Prime Minister Takaichi deepening ties.
This woman is a winner. So, we've become very close friends all of a sudden because their stock market today and our stock market today hit an all-time high. That means we're doing something right.
Joining us now from Tokyo is Bloomberg's Paul Jackson. Trump promising almost anything to Japan. Paul, what's behind this?
Well, there was a lot of flattery and backslapping going on today as the leaders kind of congratulated each other. Trump offering to do anything for Japan and saying the US will always be there. And Takaichi saying the world is a more peaceful place because of Donald Trump. The self-congratulation continued. But later in the day, Donald Trump told US servicemen that Toyota was going to spend more than $10 billion putting up plants all over the US. Therefore, he should buy a Toyota. And this takes us to the crux of the matter. Donald Trump was here to essentially cement the strong arming of Japan into forking out $550 billion in investment in the US. And amongst a plethora of pieces of paper that came out during the day, one was a guide, a fact sheet to over 20 projects that are under consideration for this investment fund. Remember, This is an investment fund where Donald Trump makes suggestions, and Japan has to provide the funds within 45 days, or it risks tariffs going up again.
And obviously we're having that problem with South Korea, that the investment promised is now, a little bit in question because we can't get the details straight. So there is the possibility that that will happen, but certainly President Trump is making waves in Japan and with the markets as well, with the yen trading below 152. Does it stay there, Paul?
Well, that is to be, I think one of the key factors going forward is what action the Bank of Japan takes after the Fed this week, how near term we expect the next rate hike to be, and also how aggressively Prime Minister Takaichi spends in an extra budget to deal with the inflation problem that is at the heart of Japan's voters' dissatisfaction with the previous administration of former Prime Minister Ishiba.
Paul, thank you so much. Very appreciate the context this morning. That's Paul Jackson there in Tokyo. Many tech companies laying off employees this year, with the latest being Amazon reportedly cutting jobs across many departments. It could affect as many as 30,000 people. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, why these particular cuts at Amazon? It seems like a massive number. Put it into context for us.
Yeah, it does. So 30,000 people, that's a little shy of 10% of their corporate workforce, and just about 2% of the total workforce. They employ over 1.5 million people. I think there's a number of things going on here, but essentially this is Amazon readjusting its workforce after a large amount of overhiring through the pandemic, and it's not the first round of big cuts they've made in the past few years. Now, I think clearly there is an AI element to this, that they're feeling like they can make these job cuts because the AI technology is maturing, and there are clearly some parts of those jobs that can be replaced by technology. And but Andy Jassy, the CEO, has always been a big proponent of automation. So I think there's a number of things going on there, but it's not just about AI. I think AI is part of the solution for an overhiring problem they had a few years back.
Yeah, I mean, we have seen several headlines in recent weeks from tech companies, including Meta, for example. And at the same time, they're spending a fortune as well on new hires, on AI hires and so on. Are they just switching around what they're prioritizing, Matt?
I think there is an element of that, and that's definitely the case with Meta. With those 600 AI job layoffs they made, it was just to kind of redivert that into other areas. Obviously, the Paramount job cuts, you mentioned at the top of the piece, 1,000, it's about 5% of Paramount's workforce. I think that looks a bit, to me at least, more like a classic M&A synergy. They kind of merge with Skydance. So I think there's a lot of different things going on here, but I think definitely there's an element of moving jobs from one part of a company to another as they kind of reposition themselves around the AI opportunity. So it's not necessarily about net cuts. It's about making sure they've got staff in the right places to take advantage of this new opportunity.
Yeah. Matt, shares of Qualcomm continuing to rise in the pre-market. It announced new chips to take aim at NVIDIA. The stock soared, more than 20% at one point in yesterday's session. Are these chips, I mean, have we seen them? Do we know what they're like, and if they really are a direct competitor to NVIDIA's chips?
Yeah, so I think these new AI 200 chips don't actually hit the market until next year, but it's definitely kind of very much Qualcomm trying to get into the AI server market and take on NVIDIA. From what we know so far, it looks like there's a couple of different ways this offering could come to market. One is just as the chip, which could sit alongside other technology from the likes of NVIDIA. The other would be as a full AI server, which would very much be a direct replacement for products from companies like NVIDIA. Now, Qualcomm's obviously been very slow to get into the AI market, and they started at it from a very different angle, from being a smartphone provider and moving into AI PC chips, which has been successful and growing, but they definitely need to kind of get bigger in the AI server market to kind of deliver a stronger midterm opportunity. And that the big advantage that they're looking to leverage is that the chips they've historically made for computers and smartphones have had to be incredibly power efficient. And obviously, as we all know, power is a massive issue in AI servers. So they're potentially looking to leverage that, because obviously as more corporates use AI processing, they're going to be really focused on the operating costs, and power is going to be a big part of that operating cost. So I think there's an opportunity here for them, but they've got a lot of work to do to convince big players in the data center market to at least test their products.
Yeah, and gain customers. That gain yesterday, 11%, and we're up fractionally again this morning. Matt, thank you so much. That is Matt Bloxham there. Over in Europe, bank earnings rolling in, with BNP Paribas trading unit reporting a hit from souring debt in the third quarter, adding to challenges after a string of recent setbacks. Joining us now is Bloomberg's Tom Metcalf. So Tom, this earnings report was very interesting because it added a sour debt provision and what it called a specific credit issue. Did we get any more details?
Yeah, probably the last thing BNP Paribas wanted, but yeah, there's sort of this now questions being asked about exactly which firm they've had to take this provision against. So 190 million euros they're saying is against this specific credit event. They aren't given any more details, so they have clarified it's not related to sort of some of those names that we've been swirling around, so it doesn't appear to be a First Brands, it's not Tricolor. But of course, yeah, what the market and what we are over in London now asking is like, who on earth is this firm? So that's something we're chasing, and it's just the last thing BNP Paribas wanted. As you mentioned, there's a lot of sort of recent developments that haven't been great for the sort of sentiment on the stock, so particularly a recent court ruling on Sudan, which suggests they might be on the hook for perhaps several billion of damages. So it's the kind of thing they wanted, a clean set of earnings, but they're really being overshadowed by, in part, a lack of guidance upgrades, but also this credit provision.
Yeah, I mean, not mentioning exactly what it was makes people even more curious, right? Let's move to HSBC exactly. Because we did have that hit from the Madoff provision, and pre-tax profit was down 14% year over year. How concerned should HSBC be?
Well, no, the market's broadly speaking, been briefed on that, and they're stripping that out as they look at these earnings. And, actually HSBC shares are up today, and that's really because, taking aside that 1.1 billion Madoff-related hit they've had to take, it does look like underlying performance is pretty positive. So you had HSBC raising its 2025 guidance, basically saying that net interest income and return on tangible equity, they're expecting that now to be higher than they thought. And, that's the takeaway for HSBC, seemingly that their strategy of streamlining, simplifying does seem to be now taking root and kind of passing through into the results.
I do want to ask you about this LIBOR rigging scandal, which continues to dog us literally 10 years later. The man who went to prison for it, Tom Hayes, suing UBS now for $400 million, alleging it scapegoated him. And I should mention that that conviction was quashed 10 years after the conviction by the UK Supreme Court.
Yeah, exactly. I mean, another twist in this long-running tale. So yes, Tom Hayes come out suing UBS, I think in a Connecticut court, and effectively saying, they threw me under the bus. They handed me over to regulators, and it turns out the criminal courts on a silver platter. As you say, that conviction has been quashed. He's already served some jail time. And, this is a really interesting matter because, of course, it's not just Tom Hayes. There's other traders out there who had similar convictions quashed effectively, or expect them to be quashed. And so the intriguing thing for me is, putting aside the merits of the case, is just how many more of these, kind of legal challenges are going to be hitting the various employees of these traders.
Exactly. I'm sure the lawyers are also watching with interest. Tom, thank you so much. Bloomberg's Tom Metcalf there. Now to other top stories trending on the terminal this morning. European car sales rose for a third consecutive month in September as more affordable EVs enter the market. New vehicle registrations increased 11% from a year earlier, with deliveries climbing in the UK and Germany by 14% and 13% respectively. China has expanded its free trade pact with a group of Southeast Asian nations, a region that President Donald Trump sought to court with a flurry of trade deals. Chinese Premier and Malaysia's Prime Minister oversaw the signing of the China-ASEAN Free Trade Area in Kuala Lumpur. OpenAI is offering a free year of its ChatGPT Go service to users in India in an effort to capture a market of 1.4 billion people. The company will open with a free promotion to users November 4th. That coincides with its first Dev Day exchange in the country. This is Bloomberg. Bloomberg Brief. I'm Bonnie Quinn in New York. The Future Investment Initiative underway in Riyadh. Bloomberg's Jumana Bersetchi sat down with Goldman Sachs CEO David Solomon. Take a listen.
The Fed, will cut rates tomorrow, and then we'll see. I know the consensus is you'll get another cut before the end of the year, but the policy rate has been higher. I think they're looking to move more toward neutral, and so we'll take a step in that direction. But I think the Fed always is an observer of what's going on in the real-time economy. The real-time economy can shift very quickly. At the moment, I would say the U.S. economy is in quite good shape, but I wouldn't jump forward. There are lots of forward prognostications about the path of interest rates. I would just highlight mostly, I'd look at the moment. You can project forward, but just because there's a forward projection, it doesn't mean that's where we'll wind up.
Uncertainty out
There's
there.
a lot of uncertainty. I think this is a great opportunity for people that are in credit businesses and are deploying significant capital as lenders in credit businesses to look at their procedures, their practices, their underwriting standards, look through their portfolio, and really take a strong evaluation of where they are.
Yeah.
You can't separate the fact that we've been in a very, very long, easy credit cycle, one of the longest I've seen in my career, without a real credit pullback, without an economic environment that's really put an enormous amount of pressure on credit. And in that context, credit spreads are historically tight.
Yeah.
And I know at some point there will be a credit cycle. It will probably come at a period of time when the economy slows more acutely, or there's some sort of a macro event that changes confidence we have in growth and the trajectory of the economy. And when that happens, given the velocity of lending activity, there will be losses in credit, and those losses will be felt across the system. But that's different than a systemic crisis. And I don't see anything in the context of a handful of bad credit situations that's leading me to say that we have a systemic issue around the corner.
Yeah.
Unfortunately, lenders make mistakes. There is fraud in markets. And that's something that as lenders we all have to try to protect against. But we should not be fooled by the fact that this is a very robust credit environment. Credit spreads are tight. And when we do have a cycle, which probably will come when there's an economic slowdown, there will be losses, and we'll feel that across the economy.
Goldman Sachs CEO David Solomon there speaking with Bloomberg's Jumana Bersetchi this morning. Let's now go live to Riyadh, where Bloomberg's Francine Lacroix is speaking to some of the biggest names at the Future Investment Institute Summit.
Let's redefine. Is it true? Let me be a bit provocative by arguing against it. One, access point to a financial service by the individual. The number of banking accounts held by 15 years above and has been increased from 3 billion accounts in 2014 to now 5 billion accounts. And the global account ownership ratio has also increased from the 50% to now 80% over the past 30 years. Two, banks have been indeed providing financing to fintechs and the non-bank sectors. For example, in the United States, the bank lending to a non-bank sector has doubled over the past 5 years. Finally, banks are even distributing the products generated by those non-banking sectors as well. So that all means the banks remain an indispensable intermediary. And with that, however, we happen to be complacent, and what we need to be conscious of and what need to be prudent is, as a responsible intermediary, upon the intermediation, we have to be careful about what we are going to intermediate in order to preserve the overall safety and soundness of the World Bank systems.
Mr. Russell, now how do you expect actually Saudi banks, but also broader Middle Eastern banks to change because of the disruption, which could be new entrants, which could be private markets, so what you're selling, and AI?
Francis, we are changing already. So when we talk about fintech or disruption or digital banks, I always respond by saying we are.
And you can continue to watch that full panel on your terminal at Live Go. Coming up, a look at what else is making headlines in your front page news. That's next. This is Bloomberg. Time now for your front page news. First up, the New York Times reporting officials in Jamaica are concerned only a fraction of residents have headed to evacuation centres as Hurricane Melissa barrels towards the island. Jamaican authorities anticipate 50,000 will be displaced, with just 1,700 evacuating by last night. Next up, the Financial Times leading with Apple set to top $100 billion in annual revenues from its services businesses for the first time this year. The FT pointing out if Apple hits those numbers, that would make its services division alone larger than the entire annual sales of Disney, Tesla or Tencent this year. And on the Washington Post, more than 100 former Justice Department officials urging a federal judge in an amicus brief to dismiss charges against former FBI Director James Comey. And those are your front page headlines. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Trading trade, futures muted after a searing rally as President Trump pledges a stronger relationship with Japan before his meeting with his Chinese counterpart Thursday. Mounting layoffs, Amazon and Paramount announcing job cuts just in the last 24 hours as corporate America tightens its belt and turns to AI. And bank CEOs downplaying credit market concerns at the Future Investment Initiative. We're live in Riyadh this hour. Let's take a look at those markets then. As you can see, we have some movement on Russell 2000 futures, not so much though on the S&P and Nasdaq 100 futures complex. Of course, yesterday the S&P finished up 1.25%, the Nasdaq 100 was up 1.8%. Let's take a look at the bond universe. We have plenty of auctions this week, and of course, markets are waiting for that Fed decision, even as a cut is 98% priced in. But it's the language around the cut and what the questions asked might be that are moving this market. We have the 10-year yield now firmly below 4%, which seems to be now a ceiling, and the 30-year yield all the way down to 4.5446. A couple of fairly well-received auctions, and they continue as well. And then just to point out that the yen is below 152 per dollar as the president finishes up his visit in Tokyo. And we have some headlines out of China as well to the effect that consumption is going to be boosted, and a lot of positive things about the Chinese economy. That from Xinhua News Agency. Shanghai Composite Index did top 4,000, but then it strolled out. Let's get to some individual stocks to watch now. Over to London and Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with some breaking news that the U.S. government has announced an $80 billion investment alongside Westinghouse Energy, Cameco, and Brookfield in order to boost nuclear power reactors, nuclear power facilities to power the next era of the AI trade. We're seeing shares of Cameco up 14% in pre-market off the back of this announcement. Now, Bonnie, nuclear power and the power trade around AI has been a real focus of not only the U.S. government but investors of late. We've also heard that Google is teaming up with Next Era Energy in order to collaborate on nuclear power needs. If you can flip the board, Next Era Energy is also seeing a boost off the back of this announcement from Google that they are teaming up. The Next Era shares are up 3%. They've signed a 25-year agreement with Google that does include restarting a nuclear power plant in Iowa to help Google with its AI power needs. Lastly, let's end in the chip space. NXP Semiconductors. This is a semiconductor company that is focused in the autos and the infrastructure space, giving a rosy outlook when it came to its earnings after the bell last night. Those shares are up 1.6%. This does tie into the tariff theme here. Some of their customers had delayed some orders of chips at the back of tariff uncertainty. They see that uncertainty alleviating, and those customer orders are returning. Bonnie?
All right, Valerie. Thank you so much, Valerie Teitel there. Day 28 of the U.S. government shutdown and no end in sight. JPMorgan's Kim Crawford is concerned about a lengthening shutdown, also slowing wage growth, and says the Fed will maintain its easing bias tomorrow. Kim is Global Rates Portfolio Manager at JPMorgan Asset Management and joins us now. So, Kim, of all of those worries, what's top of list for you?
Well, I think right now we're looking at the US shutdown and how long that is going to go on for. Our base case is still that this is going to remain pretty short-lived. in terms of the look ahead. But I do think, if it does continue lengthening for a significant amount of time and more paychecks get missed, then you go into the realms of non-linearity and discussions around more permanent scarring. But for now, we still think there are guardrails in place and that the macro impact will be relatively short-lived.
It's just another blind spot, right? And we've seen, obviously, deterioration in the data quality as well, because we're relying on private sources for economic data. What is the Fed supposed to do if this continues past tomorrow's meeting? How does it read the health of the economy?
Yeah, so I think the Fed doesn't have the payrolls data at the moment, but there are still a lot of other indicators that it can look at. So on the labour market front, you've still got job openings from Indeed, you've still got the hiring rate and JOLTS, you've still got the labour market differential in the Conference Board survey, just to name a few. And those are still consistently painting the same labour market picture that we saw pre-shutdown, which is a labour market that is slowing gradually while slack continues to build. So I think that they do still have enough data. And then, of course, on the inflation front, we actually got the CPI number. And there, it's still pretty contained. Yes, we are seeing that goods inflation reaccelerate on the back of the tariff pass-through. But the magnitude is still pretty contained. I think businesses have clearly figured out ways to deal with these tariffs differently. Inflation expectations are still contained as well. And then, importantly, you've got that significant services disinflation offset that we saw, which we think will continue as well.
Kim, how concerned are you about layoffs right now? We have the official word from Amazon from their press release now that 14,000 in its corporate headquarters are going to be laid off. That was after Reuters reported 30,000 total layoffs. And of course, as Neil Dutta pointed out during the week, we've had layoffs at Nestle, Molson Coors, Target, Applied Materials, Charter Communications, GM. You can add Paramount, Skydance and Chegg to that list now. I mean, these take on more significance when we don't have official data, right? Are layoffs really picking up in corporate America?
So I think it's a pretty bifurcated economy that you're looking at the moment. Part of the layoffs, I think, are structurally AI-driven, where the Fed's monetary policy isn't going to be the most effective tool to combat, as Wallace said a few weeks ago. But I think part of it is still a cyclical demand weakness. But our base case is still sub-trend growth. It's not recession. We are seeing some pickup in layoffs, but not something where the Fed, I think, needs to go way below neutral in terms of cutting rates yet. I think if I look at Q3 earnings as well, that are building this week and what our corporate analysts are telling us, margins are still healthy and they are high, partly on the back of layoffs, of cost reductions and efficiency gains. And then you also have investment that is going to be coming through on a look-forward basis because there's less uncertainty around trade. And then demand as well is expected to be relatively stable as long as this no hire, no fire equilibrium remains in the labour market.
So let's look at the FOMC. They obviously begin to meet today, decision and news conference tomorrow. What happens market-wise, Kim, if we get a very divided FOMC or, for example, if we get a two-sided dissent? So, Myron or somebody else wants a 50 basis point cut, but others don't want any cut at all tomorrow.
So I think Myron we all know that he probably will be dissenting. I think the rest of the committee is going to stick with that 25 basis point cut, given that the data they have, the labour market continues to slow, they still are above neutral, and they, I think, can still move gradually towards neutral. What we're actually going to be looking out for a bit more this week is the decision on quantitative tightening. Do we get any indication of when the Fed is going to stop its balance sheet runoff? If we look at our measures of liquidity to GDP, they have been running quite tight for over a month now, and I think there are some tensions in the funding market that the Fed should address. So we're looking out more for that and what the composition of the future balance sheet of the Fed can look like as well.
Where are you seeing those tensions, Kim, and how would you suggest that the Fed address them?
Yeah, so I think it's just stopping that balance sheet runoff before year end. I think there's enough in the data to suggest that they should do that just before year-end to remove that tail risk of a funding flare-up that then increases interest rate volatility as well. We also know that the Fed wants to move back to an all Treasuries balance sheet. So the question for us is, where then do they put those reinvestments from mortgage-backed securities and Treasuries back into the market? Is it more at the front end or more at the back end, or just split across the curve?
Yeah, I mean, this curve has had a bias towards, moving a little bit lower. Kim, is 4% a ceiling now, do you think, for the 10-year yield?
So we're looking at a range of 3 3/4 to 4 1/4. It's been a pretty strong magnet, that 4% level. But I think what the market really needs is to see that payrolls data come back as the shutdown is lifted, and just see that tier 1 data to really push it into its next move, either lower or higher, depending on where the data goes. Where we actually really see value in government bonds is not so much the very front end at the moment. I still think you're getting a relatively cheap option on maybe a harder, a softer economy taking hold. But I think really the real value comes in that forward space of intermediate rates, where I still think they are pretty high, considering that we have less uncertainty now on fiscal trends, economic outcomes, and the international flows as well. So we still do see a lot of value, probably more in the intermediate forward rates, is for bonds in your portfolios as a global diversifier, just as inflation still remains pretty contained.
Kim, there is a scenario where this shutdown continues and continues, right? And we're looking at Thanksgiving and beyond. But to this market then is, how important is trade and the outcome Thursday of the Trump-Xi meeting?
Yeah, so I think, the trade talks are going in the right direction. I think we are getting some stability for now. I don't think we think it's the end of US-China trade tensions. But what I imagine is that you get a broad framework for the relationship going forward, which then contains some tension. And then you get more smaller discussions along the way and smaller agreements, more to kick the can down the road. But as we've seen in markets this week, it has been good news, particularly for risk assets, as tension and uncertainty eases for a while and prevents the most disruptive outcomes for the time being.
All right, Kim. Well, let's hope it stays that way. That is Kim Crawford of JPMorgan Asset Management. Thank you so much. Now to other top stories trending on the terminal this morning. JPMorgan CEO Jamie Dimon said he continues to cajole staffers into the office because the firm has seen junior bankers aren't able to learn as much when working from home. Speaking at the Future Investment Initiative in Riyadh, he added that even top managers struggle to have honest conversations when meeting remotely. Former UBS trader Tom Hayes, who became the face of the LIBOR rigging scandal, sued his former employer, accusing it of handing him over on a, quote, silver platter to global prosecutors in order to protect the bank, UBS, and its senior leadership. Hayes filed a claim of malicious prosecution against the Swiss lender for at least $400 million in Connecticut on Monday. Americans are heading into winter less protected against one of the season's deadliest viruses, with flu vaccination rates forecast to fall more than 10% this year. CSL expects U.S. vaccination rates for the 2025-2026 season to drop 12% overall and 14% among people aged 65 and older compared with last year. Coming up, Trump's visit to Japan continues. We discuss Trump's trip, plus his upcoming meeting with China's President Xi Jinping. This is Bloomberg.
This woman is a winner. So, we've become very close friends all of a sudden because their stock market today and our stock market today hit an all-time high. That means we're doing something right.
President Trump reaffirming ties with Japan and its alliance with the United States. For more on the president's trip in Asia, Bloomberg's Tyler Kendall joins us now from Tokyo. So Tyler, obviously very, very warm relations between the two leaders. What can you tell us about actual specific details ironed out in the meeting?
Yeah, hey, Vani, good morning. Well, we did get a series of announcements out of this expanded bilateral meeting between President Trump and the new Japanese Prime Minister Takaichi. Now, the two countries did sign this agreement when it comes to critical minerals, though it's light on details. It appears to be a cooperation agreement where both sides are going to help bolster each other's industries, not just in mining, but also in processing, as China really has a grip on the market. They also signed a memorandum of understanding when it comes to shipbuilding. That was between Commerce Secretary Howard Lutnick, who's here on the ground in Tokyo, and his counterpart, as again, China has a grip on this market. It accounted for more than a third of all total global fleets last year. Now, perhaps, while those agreements seem to be a little more light on details, it appears that this is in a move to bolster U.S. and Japanese ties. We did get the most information we have to date when it comes to Japan's pledged $550 billion investment fund, seen as absolutely critical for the country securing that more preferential tariff rate of 15%. Japan today, Vani, released its first list of potential projects, all in these key critical areas that the U.S. has deemed essential to bolstering its own position in a bid to counter China. Includes a range of projects, everything from artificial intelligence to energy, and corporate names such as SoftBank, Toshiba, and also Westinghouse. Now, again, this isn't the finalized list. The Commerce Department is going to have that final say, but of course Japan is critically important in those negotiations going forward.
And of course the president is going to want to talk about those deals as he heads to South Korea for APEC next. Tell us what's in store.
Right, it is clear that all of the stops ahead of this critical meeting on the sidelines of the APEC summit between President Trump and Chinese President Xi Jinping have been designed to give the U.S. as much leverage as possible. I just went through the Japanese deals. Take what happened over the weekend on the sidelines of the ASEAN summit in Malaysia. President Trump also inking and reaffirming trade deals with some Southeast Asian countries, particularly when it comes to critical minerals. Again, now at APEC, President Trump on his first day tomorrow, he's going to address the Leaders Summit and also have a bilateral meeting with the South Korean president. Still big questions about South Korea's trade deal. In fact, they have yet to see that 15% tariff imposed, as it appears that they are at a standstill over that their version of that investment fund pledge, though it does appear that they are making movement. President Trump saying that he is ready to sign the deal and that he has it in front of him, but we still need additional details then. And then Thursday is leading us up to this highly anticipated meeting with Chinese President Xi Jinping. Of course, yesterday we had been previewing that it appears that a framework has been reached for President Trump and Xi Jinping to finalize, but it is teeing up some key diplomatic wins, Vani, but at the end of the day, it still leaves some of those core, deeper divisions at this point not yet finalized.
Yep, exactly. Tyler, thank you so much. That is Bloomberg's Tyler Kendall in Tokyo. Well, that key meeting taking place during President Trump's visit between him and his Chinese counterpart. Now, ahead of Thursday, China is deepening its economic ties with a group of Southeast Asian nations by expanding its free trade pact. Joining us now is Bloomberg's Brendan Murray. Brendan, China has been doing this, right, even, before Trump started his Liberation Day tariffs, but it really ramped up this approach, let's say, to other countries when that happened. Can you give us, the lowdown on where we're at?
Yeah, it sounds like both sides are going to pull back from the cliff's edge with the highest threats that they've made toward each other. China, according to the framework that we've been reporting on, will not expand its rare earths export controls, and the U.S. is not going to put the 100% tariff on top of the existing 55% tariffs on Chinese imports. So that was seen as key. Those two issues were seen as key to extending the truce that the two countries have at the moment and avoiding any sort of escalation into a full-blown trade war.
And then China had been slowing down soybean purchases ahead of the Xi-Trump summit. I guess it'll be a win if it ramps those up again.
Yeah, obviously, that would be a win for President Trump in farm country. Soybean prices have rallied for the past couple of days on expectations for this increase in demand from China, but it doesn't really count as a net win. This was something that China has done all along, and they just basically stopped when Trump launched his trade war in April. So farmers will see this as a nice additive to their income during this harvest season. reason. But in terms of the overall strategy that the Trump administration wants to have to rebalance the trading relationship, soybeans are kind of a small issue. Particularly, it's not a huge concession for the Chinese to buy American soybeans.
Yeah, for sure. Brendan, thank you so much. That is Bloomberg's Brendan Murray there. Job cuts piling up in corporate America, with the latest coming from Amazon, announcing in a press release that it's cutting 14,000 corporate roles. Let's get more now with Matt Bloxham of Bloomberg Intelligence. Matt, we see periodic layoffs at tech companies. Are these layoffs that we're seeing in recent weeks more significant than we typically see?
Yeah, I guess they are, and I guess the question is, what's really kind of the motivation? I think in the case of Amazon, it seems like this is them still kind of recalibrating after a quite substantial overhiring through the pandemic, and I guess it also talks to kind of the future economic outlook. I think if Amazon felt confident that the market was really going to grow strongly, then perhaps they wouldn't be laying off so many people. But there clearly is this element of technology evolution, and particularly AI, and companies are always looking for productivity improvements. Amazon in particular is very focused on automation. So I think as the AI technology matures, companies are looking at ways to either kind of recalibrate jobs, shift people to kind of different tasks, or in some cases reduce net headcount. And obviously we saw some news overnight too that Sequoia Capital is planning to invest in Rogo Technologies, which is looking to improve, I guess, in the short term, the life of junior bankers, but maybe ultimately replace them. And obviously we've seen similar moves by OpenAI recently to kind of to replace junior bankers who work upwards of 80 hours a week.
Yeah, absolutely. Matt, thank you so much. That is Matt Bloxham there of Bloomberg Intelligence. Coming up, we're going to get you set up for your trading day with an earnings bonanza. That's all next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. So before the bell, we get earnings from UPS, JetBlue, Royal Caribbean and more companies. Then at 10 a.m. Eastern, we're going to get the Conference Board consumer confidence data, all the more important because of the disappointment, of course, from Michigan on Friday. And then more earnings after the close. We get Visa and Electronic Arts. That's all after the close. Let's take a look at some micro movers now, just as we get United Health earnings. We first look at NextEra, up about 2% here. Google is accelerating its nuclear energy deployment in the United States, giving that stock a boost. Cameco up more than 14%. It signed an $80 billion pact with Westinghouse for nuclear reactors. You can see a theme across the markets today. The strategic partnership also involves Brookfield Asset Management and Cameco, obviously. And then Pony AI. Uber is said to be planning to invest in Pony AI and WeRide Hong Kong listings, and that has those ADRs up 4.4% right now. So let's look at the macro picture. Still trying to find some direction for S&P futures. I can tell you Russell futures are lower. Gold off by another 2% plus today. We're down below 3,900. If that was a safe haven trade, well, perhaps the central banks will step in and buy the dip. And then the 10-year yield below 4%. That's it for Bloomberg Brief. Surveillance is ahead.